Hello and welcome to a special trending topic segment of the August 2022 edition of the Presale Pulse. Now, I'm Ryan Lalonde, and joined by me, Emily Canada's Executive Vice President of Sales and Marketing, Suzana Goncalves.
Hi, Ryan.
Now, the Presale Pulse looks at some of the macroeconomic trends, both the presale and the resale market performance data and insights. But today, we're going to jump and discuss on some of the hottest topics requested by our viewers. Rising inflation and slowing demand. Now we're beginning to see some hesitancy in the Metro Vancouver market. So as a focus of this month's trending topic, we wanted to dive in a little bit deeper to the numbers and just give some perspective to any buyers interested in entering the market and understanding what's happening out there.
Yeah, so common questions we're getting right now. Number one, in a falling market, when is the right time to buy? And of course, number two, how long does it take for a market to recover from a downturn? Now, of course, when people ask these questions, their interest really is in price. So let's focus on that first. Starting with how long it takes for a market to recover from a downturn. There are two key periods of compressing values in our market, the financial crisis in 2008 and the decline in 2018 to 2020. Now, as we can see, at their worst, prices took about 3 years to recover from their peak. Now, while this might seem like a long time, it's still shorter than the typical pre-sale construction period for new homes.
No, exactly. So taking this historical perspective, even in a declining market, buyers can be fairly confident that with a build out of 2 to 3 years, like most projects, as you said, the value that they lock in at will be consistent with market pricing for new homes when they complete. Now, this segues nicely to the other question that we've been asked, which is when is the right time to buy? And that's just a really challenging question, and frankly, best answered on an individual level. But what we do know is that time in the market, rather than the timing of the market, is the single greatest natural advantage an investor has.
Yeah, so to highlight this, let's again look at the benchmark prices across Metro Vancouver, specifically looking at pricing over the last 10 years. Now, if you bought a home at any time over this period and held it for at least 3 years, you on average saw a 22% appreciation. Now, of course, there are still risks, but as 3 years becomes 4, 5, 6, or more years of ownership, your values, of course, are even greater. Even at the peak of 2016, for example, today those buyers are up over 17%, having bought at the very peak of the market. Now, all of this is without even factoring in the much higher cost of construction we're seeing, which is why pre-sale is really the choice du jour, because you can lock in today's construction costs, get the price appreciation during construction build-out, and likely hit up a more favorable mortgage rate as interest rates ease in the next 3 to 5 years.
And so if your belief, and as you just said, if your belief is that construction costs are going to continue to rise, inflation is going to be part of the conversation for the next 6 to 12 months, then you know that that's going to impact end pricing. So locking in today and benefiting tomorrow is a big part of a pre-sale transaction.
Yeah, absolutely.
Well, I believe that wraps up our trending topic segment. We hope you found some value in today's episode. MLA Advisory Team is active in every major market across Canada, and it's digging deep into some of the micro trends happening out there right now. It's our goal to provide viewers with actionable intelligence and to stay real estate intelligent. Thanks for joining us, and we'll see you next month.
Yeah, see you next time.